Yesterday, we saw a clear value shift higher towards 23,800, but today the market did something important. It failed to hold that value and rotated lower. This changes the entire option narrative. Welcome back to Market Mind Monastery. In yesterday's analysis, we discussed how Nifty had migrated value from 23,650 to around 23,800, indicating acceptance of higher prices. But today's session is not a continuation at all. Instead, the market has shown signs of value rejection from higher levels. If you go back and watch yesterday's video, you will understand that higher value was getting accepted yesterday, but today the market showed a complete disagreement. Is today's move a direct reaction to the higher value area or a news-based move? What do you think? Post your comments below. Now let's decode what happened today using volume profile and auction market theory. Yesterday's session formed almost a P-shaped profile with a value building near 23,800. This indicated short covering, higher price acceptance and a potential continuation to the upside. However, for continuation, the market needed to hold above that value area. Today's session tells a completely different story. Instead of accepting higher prices, the market opened a fairly large gap down around 435 points. This gap down ate up all the gains over the last 3 days, that is from 16th to 18th March, and started to go down further low, touching 22,940 levels. Finally, it ended up with a small pullback till the lower value level of the value area. This is a classic case of value area failure. Now look at today's volume profile. At the opening until 11:20, the point of control was shifting within a small range of around 15 points. With the formation of 11:25 candle, POC shifted down by almost 75 points and then sustained its position, telling that till 11:20 market was trying to balance within a range of 176 points. By 11:25, the decision was taken and then the decision was followed. After breaching the psychological level of 23,000, the market showed an upward movement, which is a logical pullback. For a note of caution, but beware of this lower area ranging between 22,940 to 23,000. It's a nice choice to play turtle soup. Based on today's structure, here are the important levels. The supports. If market opens within today's traded range, 23,000 zone can act as the first support. Beware of the possible trap zone though, between 22,940 to 23,000. Today's POC as well as the fair value area ranging between 23,250 to 23,300 can also act as a support if the market opens in the fair value area itself or reaches and sustains above today's POC. As of the resistance, 23,600 to 23,650, which is the previous value area of 17th March, will be the first resistance. If price moves back towards 23,600 to 23,800, then the major failed value zone, that is yesterday's high value area, that zone becomes a critical resistance. So the key takeaway from today's session is, yesterday the market told us it was comfortable at higher prices. Today it clearly disagreed. This tells us that the auction is currently searching for a new fair value at lower levels. Now let me share another important detail which we have seen in today's markets. I am taking you to the OI chart of a strike range between 23,000 to 23,850. If you closely observe, you can see the difference between call and put OI. You can see that the call OI was growing, whereas the put OI was almost ranging. And this again gives a sense that the market had the potential to go further down. If you found this analysis useful, subscribe to Market Mind Monastery. Every day we break down the market using volume profiles, smart money concepts, auction market theory, and today of course the OI change. Because the goal is not prediction, the goal is understanding how the market auctions prices. Thank you.